was an article that came out from the USGS stating something along the lines where silver is going to be depleted by 2025 or thereabouts. Do you remember seeing that article, and whether true or not, are we looking at a silver supply crunch?
I think eventually we will, yes. I do remember the article quite well, actually. I was working with some people in Florida at the time, and I actually invited Ted Butler down to do an interview with him pre YouTube. We were a little ahead of our time on saying that because we were doing video streaming over the internet from the very beginning. I mean, it was something that we all take for granted now, but there was a time when there was no video streaming on the internet. And that was an opportunity to make some money in the market. But regardless, when Ted came down, we had a chat, and he decided he didn't really want to go on camera at that time, and that was fine with me. But I certainly remember it well. And there's two things to point out in an article. One, it said that silver would be the first element on the periodic chart to go. I don't think they used the word extinct, but they implied that it'd be the first one that would be in very precarious situation in order to obtain enough. And the other one was the economics, which I really didn't address, because what's uneconomic at $20 silver becomes economic at $100 silver. What does that mean? It means, well, you can't get silver out of the ground for $20, but at $100 you can and make a profit. So it's all based, of course, on the currency system that we have. And as long as people have faith in it, then you're willing to trade those pieces of paper for real silver or gold at whatever price the market determines at the time. And therefore, you can run a business based on whether it's profitable to put in all the work and capital expenditure and time required to put a mine into production. So they didn't talk about that in the article. But all that to the side, the amount of silver has been really depleted in the last 10 years, meaning that it's been a huge expanse in the amount of mining taking place from roughly 2005 to present day. So almost 2 decades. The amount of silver mined used to be up until like 1970, 350 million ounces per year. And then it jumped up to roughly 550 million ounces per year 20 years ago, roughly. And now we're at 850 million ounces a year. And there's more recycling now. Silver's always been recycled to some degree. And there could be a lot more recycling in the future because a lot of silver ends up in landfills that a lot of it could be recycled, not all of it, but a lot of it could be. So, point I'm making in a long-winded answer, I think based on what I've looked at, Matt Watson, some others that are kind of forward-looking in the silver community, the Silver Institute, that we will hit an inflection point somewhere soon, relatively soon, meaning within a lifetime of a person or less, half a lifetime, one generation, where silver becomes very scarce relative to the value it holds. In other words, it's essential. It can't be substituted. It's absolutely required for certain products. And because of that fact, the price is indeterminable for those applications. So there may be, and I think there will be, a point where there's a dual run to silver, meaning industry has to have it to stay in business and investors have to have it to stay solvent. And if those two things do act synergistically, these prices of $20 US silver are going to be bygone. You're going to see much higher paper prices.
Yeah, I appreciate that because I get this question all the time where, if industry starts to use more and more silver and they start pulling it from the mines, the new silver, how much will be left for investors? Will investors be able to go ahead and still buy silver the way that they'd like to get it?
So at some point, absolutely not. I mean, all markets move at the margin, which I've said 100 times, and the margin is investment demand. The amount of jewelry, silverware, and industrial demand is pretty steady. Yeah, in a recession, you're going to use less, but it's inconsequential relative to how much demand there could be on the monetary side. If you go back to 2020, over 500 million ounces were bought for investment purposes. We've never seen anything close to that before. So that was in 2020. What about 2023 when the stock markets are going down, the real estate markets are not doing well, the bond market is questionable? Where are you going to go? Well, Ghostbusters. You're going to go to the precious metals. You may go to crypto. You may go to both. If cryptos are having a hard time at the same time as the NASDAQ falling, which there is a correlation there, John Perez, who's someone I interviewed on my crypto conspiracy series, I mean, he's got an expression: when Bitcoin dies, silver flies. He's gone as far as to call the silver psyop that the amount, most of the money that's in cryptos would have initially gone into gold and silver, but with the allure of the crypto world, there was another place to put those speculative funds. And if you look at the market cap of some of the top 10 cryptos, I mean, that's a lot of fiat that's found its a home in that genre, whereas that genre didn't even exist until about 2009. So I think there's some merit to the idea of a silver psyop. I mean, I like to use the word kind of in fun, but it is a psychological operation from the aspect of, oh, gold's no good, you need gold 2.0. This gold you hold in your hand, that coin, that's passe. You got to have it on your wallet, and that type of thing. But, I'm a big believer that the quality of gold in a Bitcoin is 0 carat, and the quality of a gold coin is 24 carat for a gold maple, for example. There's a big difference between 0 carat value and 24 carat value.
This whole silver psyop, uh, is part of it. Let's just say the silver to gold ratio, where right now it's at about high 80s, low 90s, somewhere around there. But it's by price. It's taking the gold price and dividing it by the silver price, and then you have the ratio. So this ratio is based on price. Previous to that, when we had that 16-to-1 ratio, that was more or less a ratio of silver to gold in the crust of the earth. And with miners telling us the ratio is now about 9-to-1, 8-to-1, do you think at some point it's going to bifurcate where we get away from a price ratio and move back to a sort of a crust ratio?
It's possible. The only reason, and I've thought about this, and it took me a while to reach the conclusion I've now had, and that is, gold and silver trade at the natural ratio for thousands of years. And for those thousands of years, they both serve the same purpose, and that's money. So you could make the argument that silver's highest and best use is as money, not as an industrial commodity. Because when it's thought of as an industrial commodity, the ratio has gone above 20-to-1. I mean, if you go back in time and plot it out on a chart for the last almost 5,000 years, silver's never got a higher ratio than 20-to-1 for thousands and thousands of years. Now, well, David, that you're just talking history. Yeah. So it's only been in the last 120, 130 years where it's gone above 20-to-1. And that's when silver's been demonetized. It's not money. We say it's not money, therefore it's not money. And yet I could take a silver quarter right now and I could go into any store and put it on the counter and buy something with it. Now, of course, they're only going to give me 25 cents worth, which I don't know what you could buy for 25 cents anymore. But it's currency, it's still valid. You could use it. I mean, who would? Because the fiat value of it's about 10 times that much, about $2.50. But nonetheless, it's still money. It really is. But no one, I should say no one, very few think of it in those terms. And most of your, let's say, more establishment types that analyze the silver market really analyze it from a commodity only aspect, like they would wheat or corn or something like that. They don't look at it as a monetary asset. The banks certainly don't. If the banks looked at silver as a monetary asset, the price ratio would probably be the natural ratio or greater. In other words, 5-to-1 maybe, because its value would have to be so high from where it is now to be of any substance to a bank. Why would you store something of such small unit price when it's not going to help you monetarily? And of course, that's why one of the reasons I believe that it was basically removed from the monetary sphere. Because if it was treated as money, the price would be a hell of a lot different than it is right now. And that leads to the final statement, and that is when enough people vote with their fiat that it is money, nothing can stop it. We could get to, a higher price, 20, 40, 80, might double, redouble, and double again. I don't know. But I do know when the run to gold starts, it'll spill over to silver. It'll be global this time, not US only. And maybe, as Mike Maloney said, get unobtainium. You can't buy it at any price, especially if fiat's failing to the point where people don't trust it in the aggregate. The main bottom line with almost everyone is I don't trust fiat. I have to have something else. If we ever get to that point, then what are the dealers going to do? Are they going to sell silver? Why would they? If they don't trust the cash they're getting for it being worth anything the next week, they'll close their doors and whatever inventory they have, they'll keep it. Will they get to that extreme? I don't know. I don't know. I'm not making the case that will happen. I'm just making the case it could happen. And we've never been in these waters before. As I said earlier in the interview, we are in uncharted waters. And we are in, regardless of what the powers that want to be think, doesn't necessarily mean that's what's going to take place.
Yeah, so true. Just to add to that, there was a time in Egypt where the silver to gold ratio is actually 1 to 1, and then it was that 16 to 1 for thousands of years, as you said. And I'm bringing this up because I saw a chart. It only went as far back as the 1700s, and it maintained that 16 to 1 ratio all the way until about the 1890s, and that's when the Sherman Silver Purchase Act came into play, and silver has never ever maintained that 16 to 1 ratio since. I guess that's where it went from that crust ratio to a monetary or price ratio.
Well, yeah, slight tweak on what you said. I mean, it's not really invalid, but the natural ratio in the 3,000 years ago was about 12 to 1. And it traded at 12 to 1. And it only got to 16 to 1 after the Bank of England went back on the gold standard. Sir Isaac Newton basically said the ratio should be, looked at it in the street, it was about 16 to 1. So that's what I call the monetary ratio. And you're right, it's been that way for many, 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 many years. But that was established by man rather than the market. If the market was able to float an ounce against an ounce of gold, an ounce of silver, the market would have determined it was 16 to 1 on one day and maybe it'd be 12 to 1 on another day. But that isn't. It was a mandate, that 16 ounces of silver is equal to 1 ounce of gold. But your point is well taken that, we have been out of the monetary sphere with silver for such a long time. And when we were, it's a much higher value relative to gold. And again, my point, I'll repeat it, is that it doesn't take a lot of votes with yen or euros or Canadian dollars or Aussie dollars, whatever, to vote and say, I'm voting for silver to take it much, much higher.
Yeah, absolutely. See, that's why I'm just the host. You're the expert, so always listen to the expert, not the host.
Well, I mean, look, I've been, I would never have thought 10 years ago, if you would have said, hey, David, is silver going to be at 20 US and, third quarter of 2022, I would have laughed at you. I said, no, I mean, I could, and I'm not an arrogant man, or I don't think I am, but, I was pretty sure that with this much money printing and all that's gone on, which I accurately predicted or forecast, that the price of silver would certainly be more reflective of that than it is. So, the game's not over. There's a lot of pressure on silver in so many ways. And the main way is basically saying, I don't trust government. I don't trust their currency. I don't trust what I'm going to be able to buy. I trust gold. Gold will be the stalwart. It'll be the leader, I'm pretty certain. But again, like in 1980, the spillover in the silver will be spectacular. There's lots of roadblocks for silver, as you know, Patrick. I mean, silver's got a value added tax in many jurisdictions, and it's got a high premium in jurisdictions that don't have a VAT. So if you're going to buy precious metals and you got, 2,000 euros, you want to buy gold or you want to buy silver? Well, it's kind of an easy choice. You want to buy gold. One, it's a little more stable. It's not as volatile. And two, you don't have to overcome these huge premiums in order to break even. Even with all that deterrent to silver, silver will still move. there'll be people that want it at any price. And as I outlined earlier, there is an infinite demand for real money at some point in the collapse. Some point going to the end or getting to the end game, everybody wants it that's awake, which may only be 3 or 4%. But if it's only a 0.5% now, that's an eightfold increase. People that are awake enough to say, oh my God, I got to get out of the bank and into gold. And then that's when the phone rings and the person says, well, you should have called us last week. We don't have any now.
David Morgan, before we wrap up, can you let the viewers know how they can follow you or get in touch with you?
Sure, the main website's themorganreport.com. I do fairly active on Twitter. I've got a YouTube channel, The Morgan Report. I'm on LinkedIn if you're so inclined to be a LinkedIn person. Don't really have a Facebook presence. The website's the best place, themorganreport.com. I do have a free letter. It's really not a letter. It's most of the interviews I do. I post them for free. I write stuff in there occasionally, but sometimes we get, let's say a discount on gold or silver. Not much of one, but maybe a lower premium than you might get in other places. That's rare, but we do put those out when we have the opportunity. And it's a good place just to get weekly updates, which I do myself, just a real small podcast. I do a review of the financial markets, but I focus more and more on gold and silver in that podcast because, as you know, Patrick, there's so much information. We're in the information overload. And what used to take me a week or so to get really good information to pass on to people, that's like a 3-hour event now. There's so much happening. And I'm laughing because it's hard. It's hard to keep up. Luckily, I have more than me. I do have a staff and some help and all that. But things are accelerating, and they will continue to accelerate as far as I'm concerned.
David Morgan, we appreciate the time and the insights you've given. I hope we can do this soon and want to wish you all the best.
Thank you, Patrick. Appreciate it.
That was David Morgan sharing his views on the markets and precious metals. For more of David's insights, please visit themorganreport.com. If you like this video, please subscribe, share, and give it a thumbs up. We appreciate those greatly. Audio-only versions of this interview can be found on iTunes and Spotify.